Okay. All right, guys, we are going to be solving a statement of cash flows using the indirect method. All right, so we want cash flows from operating activities. Right. So first line item is going to be our net income. Okay, so let's look for net income right here, 62,500. 62,500. Okay. Now our goal is to get between the three, the operating activities, investing activities, and financing activities. We want to get an increase from year 1 to year 2. So I'm just gonna put the number here so we know that's our end goal. 96,719 minus 28,694. Okay, so we want an increase in cash of 68,025. Okay. All right, let's start with operating. Let's look for any non-cash expense. See if we can add that back. And that will be an additional information. Okay. Purchase, pay dividends, sold. Says, okay. Equipment costing with the book value was sold, issued bonds, purchase equipment, pay dividends. I don't see any net income. I don't see any depreciation, but okay, I do see a change in accumulated depreciation. Okay, so I know we sold something. Typically, we are given the depreciation amount, and I don't see it in this problem. We need to add it back. So I will give it to you in the exam because this problem doesn't say it. I will have to assume that the accumulated depreciation change, okay, also is that depreciation expense, but we're also selling an equipment, which this will require a little bit more work on depreciation. Okay, we have a change in accumulated depreciation, and we're gonna do a T here, accumulated depreciation. Okay, and I'm not gonna ask you to do this. Okay, so don't worry about it. It's just that we're not given the depreciation amount, and let's look it up this way. Just a fun way to see it too. So what do we have? We have a beginning of 719. Remember, accumulated depreciation has a credit balance, and we have an ending balance. Of 762, 500. Okay. And we have a change, right? That means that we increase accumulated depreciation. That means that there was a depreciation expense. However, we're selling equipment that cost 25 and it has a book value of 6250. Okay, so if this equipment cost us 25,000, let's do the math. Okay, 25,000. And we have a book value of 6250. That means that when we sold the equipment, we also had to take care of the accumulated depreciation related to the equipment. So accumulated depreciation must have been debited by 18,750. All right. Let's see if there's any other. We're purchasing equipment. That doesn't matter. Purchasing. So in essence, is 715 minus 18 plus x equals 762,500. And if you're accounting majors, this should be something that you should know, okay? You should know. Accumulated depreciation has a credit balance. If we sell an asset, we need to debit the respective accumulated depreciation. And then we're also expensing the increase for the year. So in that case, let's start with 762 plus the debit, okay, minus the credit, right? That means that our depreciation expense for the year was 66,250. Okay, so depreciation expense. Do not worry. I will not ask you to compute this number. I usually give it to you, okay? But this was kind of fun to do. Okay, so depreciation expense, we're adding back 66,250. All right. Then we are going to see if we have any gains or losses. All right. Right. We're not giving gains. Okay. But we know that we have book value of 62 and we sold it for 75. It looks we have a gain here, right? We're selling for more than the book value. So we have to decrease the gain. Gain on sale of equipment. Okay. In that case, we have 7,500 cash proceeds minus 6,250. That's the gain of, this should be a negative, okay? So let's put it this way. And let's put, oops. Okay, good. Gains we're subtracting. Okay, so net income already has this gain. We need to subtract. Let me see. Anything else that might have so available for sale securities costing 86. Okay, this is another gain right here. Okay, gain on sale of investment. Okay, gain on sale of investment. We go from 92,500. Actually, let's make it a negative. Okay, 86,875 minus 92,500. Now we have a gain of 56.25 that we need to add back. That's it. Doesn't look like we have any other gains or losses. Okay. So we adjusted for non-cash expenses. We adjusted for gain and losses. And now we have to look at the current account. So first, current account is an account receivable that is increasing. That means that we have to decrease. Okay. So decrease, increase in accounts receivable. Right. So we're decreasing. We go with 100,000 minus 85,313. Okay. So let's do it backwards. Okay. So that way we have a negative 85,313 minus 100. Okay. There you go. Negative 685. What else? We have inventory going up. Okay. That means that we are decreasing. Decrease, increase in inventory. Okay. All right. In this case, we have 181, 250 minus 206,250. Okay, so we have an increase in inventory of 25,000. So we're gonna decrease, right? Then we have prepaid insurance, right? Prepaid insurance looks like it's decreasing. So we're gonna increase the increase in prepaid. Okay. So here we go. We're increasing. So we go 25 minus 1875. That's an increase. Now let's look at liabilities. We have an accounts payable decreasing. So we're going to decrease accounts payable. Right. So now we have 95,425 minus 185,838. I think I'm copying these numbers, right? Okay. And then we have a decrease in salaries payable. Ooh, we're paying. Decrease in salaries payable. Okay. So here we have 25 minus 30,625, right? another decrease. Okay, liability goes down, cash goes down. Asset goes down, cash goes up. In this case, asset goes down. Okay, in this case, asset goes up, cash goes down. Asset goes up, cash goes down. Asset, in this case, asset goes up, cash goes down. Okay, but in this case, we're increasing prepaid. I did something wrong here. This prepaid insurance is decreasing. So increase and decrease right here. Increase and decrease. There we go. Right? So goes down, cash goes up. All right, I think we're done with all the currents. I don't see any current. That's it. So let's say net cash, hopefully provided by operating activities. So let's get the summary here. Oh, I guess it's used. So again, 66. Oh, this decrease in accounts payable is a killer. Look. Wow. Okay. Do it again. Sum of all these. Wow. Negative. Okay. So in this case, it's not provided. It's used. Okay. Used. That does not look good for the bank. Okay, let's see what else. Oh, it looks like we issue bonds payable. That's what is bringing our cash up. How are we getting to 68? That looks really good. Okay, now let's look at cash flows from investing activities. So investing, we're going to be looking at long-term assets. Okay, so we have long-term investments going up. What do we know? We know that we sold, okay, available for sale securities at costing 86,875. We sold the investments for 92,500. Okay, it means that proceeds from sale of investments. We're getting 92,500. Okay, what else is happening? Equipment. We sold it for 75. Proceeds from sale of equipment. And that was 7,500. See here, the only amount we care about is the cash that we're getting. Cash that we're getting. Issue bonds, forget it. That is financing. Purchased new equipment. Oh, and we paid cash. Okay, purchase equipment for cash. This is gonna be a negative. It's an outflow of cash. 181,250. Okay. What else? Dividends. That's financing. That's it. So it looks like this is also cash used. Oh, net cash used in investing. Okay, let's see what we get. Another negative. Okay, it should be red, right? It's just put the reds in red. Okay, no. Negative 81,250. Okay. Oh, wow. We're really in the negative now. Let's keep going. Net cash flows from financing activities. And it looks like we have mainly two. We have, what is this? No payable, long term. We're paying this down. Okay. We issue bonds. We paid dividends. Okay. And we also have a note payable that is going down. So it looks like we're paying the principal on that note payable. All right. So let's see. Let's start with the note payable going down. So paid principal on note. Okay. So that went from 93,750 to 31. Okay. 31,250 minus 93,750. Okay, so that's an outflow of 62. And now this is the biggie, right? We're issuing bonds. We go from 0 to 250. We're issuing bonds. This is going to put us back in the black. 250. All right. We also pay dividends, 25,000. Okay. It's paid. It's a negative 25. Okay, so let's see. Net cash, in this case, provided by financing activities. 162. Whew. Okay. Let's see what is the net cash. Net cash change. What do we have? This plus this plus this. Cross your fingers. 68,025. Yay! We did it. Okay. This is a pretty hard problem. Okay, so we're gonna do plus, oops, plus beginning. So much. Beginning balance. That's the beginning balance right here. 28,694. Okay, that will give us the ending cash balance. So we do 68 plus 28 equals 96,719. Yay, we did it. And this is how a full-blown statement of cash flows will work. So I'm going to end the recording now.